All right, so let's begin the segment with a very interesting conversation. Indian markets aren't euphoric right now, they are uneasy rather. Index moves are narrow, leadership is thinning, and volatility is no longer just a global story. The big question for investors isn't where the market goes next, but how much risk is already hiding beneath the surface. Now, this is no longer a one-way market. Gains are very selective, drawdowns are sharper, and conviction is getting tested. So, is this a healthy pause or the start of something more meaningful? Now, at a time like this, investors need clarity and not cliches, definitely. So, while indices struggle for momentum, risk is building quietly in the pockets of the market. Now, to talk more on this, joining us now is Vaibhav Chugh to help decode what this phase really means and how investors should be positioned. Vaibhav, hi, welcome to the show. And definitely, I just want to talk about the crash aspect across asset classes. So, equity is crashing, gold is crashing, silver is crashing, Bitcoin is crashing, real estate is crashing. What do we do? I mean, there's so much of crash everywhere. Dollar is crashing, even rupee is getting weaker. So, what's happening?
गुड मॉर्निंग कविता. फर्स्ट ऑफ ऑल थैंक यू फॉर हैविंग मी. वो हिंदी में बोलते हैं ना, हर बुराई के बाद अच्छा ही शुरू होता है. सो अकॉर्डिंग टू मी, all the all the all the all the volatility which is around is
Yeah.
actually leading to good times ahead.
Right.
I am particularly very confident now where we have come today. I mean, specifically post October 24, things are now looking much better. So yes, we have had volatility, we have had crashes, like you said, but I think the structural story of India continues, and we are now out of pause. More importantly, we should now look at what lies ahead rather than what happened before.
So you know what? We've been on this line since almost the start of 2025. We are waiting for the rate cut cycle to begin, and finally, we did see a couple of rounds of rate cuts. But structurally important, that's a very important aspect for long-term investors, But people also have positions in short-term and for medium-term. Now, factoring all of that, a big headwind that's off our heads, which is the US trade deal. Okay, that's gone. So a very positive development. The markets also tried cheering it up, but then we couldn't sustain at the higher levels. The Q3 results so far have not been very upbeat. In selected pockets, we did see good set of numbers, but otherwise, whole, it's not like a sentiment changer for the markets. So if we talk about direction right now, Vaibhav, if we talk about structurally being strong, where is the market headed?
So let me put it this way, Kavita. See, in October 24, when we saw the last peak, from that time till now, our price earning ratios or the valuations have come off. Of course, we are still a little expensive compared to our past averages, but I think where we were 2024 till now, we have come a long way. Uh, if I have to put it in a very structured manner, if you write what was the issues in 2024, what is where we are today, you will find a lot of smoothness. So, for example, in 2024, our markets were at the peak and earnings were not visible. In fact, that year earnings were about 3% or thereabout. We were the best performing emerging market. Interest rates were high, liquidity was low. But if you plot all these today, we have come a long way. So our price earning ratios from about 24 have moved to about 22 or thereabout. We have seen interest rates coming down by about 125 basis point over last 15, 18 months. Our markets have corrected. Uh, Structurally, when I say that structurally we are very, uh, strong, we continue to be strong. Basically, I mean, the one, the domestic flows continues to be very robust, and I think that gives a lot of confidence that liquidity will continue for markets to get support. Like I said, interest rates have come down, and if you also recall, in 2024, the government capex was also kind of on a lower side. Today, not only the government capex has come back, even just couple of days back, you would have seen in some of the papers that even the private capex has also started coming. So that's I think a very positive thing to take cognizance of. Another thing, Kavita, if you deep dive into the numbers of some of these banks and other financial institutions, provisions are coming down, credit costs are kind of looking down. Now, what it means, it simply means that the larger economy or the smaller, companies, they are also doing well. So I think if I have to put bullet points, interest rates have come down. Government capex is right there. Private capex has also started coming back. Uh, liquidity is back. Most importantly, we have seen time correction. Valuations have come down, and
Right.
forthcoming earnings are looking better. Of course, like you rightly said, this year maybe we'll see earnings growth of about 8-10%. But what is more important is where we are headed in say 28, 29, and that's where numbers are looking pretty decent on the earnings side.
Absolutely. Also, let's just shift the conversation towards sectors. Now, having said that, IT definitely is on radar. We saw Anthropic coming, Altruist coming with Hazel. So it's an IT distortion in our markets and also in the global markets, especially in the US. Now, how are you trying to decode this particular impact? And also, when we connected with Indian IT sector, how much, more of dent do you see coming on these specific stocks?
Okay, so see, Kavita, how I read into all this is that you also have to look at what happened in the past. There were, if you remember, there were times when ERP came, and there were again these kind of apprehensions in the mind that Indian IT will not do well. Similarly, this happened when cloud computing and all that came. What I firmly believe is that one that Indian IT companies are very very resilient. We are a very very talented country, so to say. If we know that some kind of disruption is coming, do you think we will wait and watch? My sense is that our Indian IT companies will also bounce back. They must be doing a lot of stuff, but we have to give time. I think rather than reacting on what news talk about, we need to keep in context what these kind of news have come in the past. We have come out very very strongly, and I think we will continue doing that. As far as this Anthropic is concerned, of course, I am not the subject matter expert, but my sense is that, for example, if you are a big bank, will you only rely on, some AI models? Probably not. You may want to have good AI model. At the same time, you also need to have good software. I think it is about productivity gains. My sense is that the consumers, maybe IT, maybe, bank or any other metal company or anything, you know, each company they want productivity growth rather than substitutions. So we will have to see how things evolve. And I'm personally very optimistic that Indian companies are quite resilient. We have great talent to maneuver any challenge which may come forward. And we have done that in the past, and we will definitely do that in the future as well.
So are you trying to understand this as a short-term reaction and not sustaining for a long term? Because the reason why I'm asking you is people who have already put their money in, okay, what should be their strategy now?
Yeah, so definitely they should put hold. And see, Kavita, what also happens is that if somebody has invested in IT, if it is only say 5%, 10%, or 15% of their portfolio, any of this is not a problem. Only issue arises when you have 100% of your allocation in a particular sector or a commodity, like we have seen gold and silver doing well. So if IT is a certain portion of your portfolio and you have all other constituents also in your portfolio, I think if there are some knee-jerk reactions, the other asset classes will manage the volatility in your portfolio.
All right, so being diversified and having the right kind of asset allocation is definitely the key.
Absolutely.
Let's talk about a high conviction call that we can see coming in from you, from your house.
See, constructively, we have been quite positive on banking financial services, specifically both fund-based and non-fund-based. Our sense is that, BFSI space will do quite well. And now BFSI space is also quite heterogeneous in the sense that, you don't have only banks and NBFCs, you also have wealth management companies, you also have asset management companies. And looking at, our trends of how Indians have been savers and now they're becoming investors, I think a lot of these capital market companies will do well, and they will continue doing well for a long period of time. Like for example, I belong to a mutual fund industry, and when we look at our business models, the first figure which come forward is that only 5.2 crore customers have invested in mutual funds. Despite of our 30-year track record and more than 30-year track record, it's just that 3% penetration has happened. We still have a long, long journey to go. Similarly, wealth managers are doing a great job, and I think uh, Indians per se will require good advice and good you know partners to work with, advisory to work with. So I think there's a lot of potential out there also. And like I said that Indians for last couple of years specifically have started understanding the difference between savings and investing, and therefore not only mutual funds per se, but even equity markets are also getting a lot of new investors. You would have seen the number of demat accounts being opened and so on. So I think that space is quite good. Of course, one has to look at the valuations and all, but if you give your money to a good professional fund managers, they will ensure that we buy good stocks at good and reasonable valuations. On the banking side, also, I've always said this that banking, Kavita, is like the nervous system of the body. If our economy has to grow, and if we have to grow say 10, 11% or 12%, and we have to become a Viksit Bharat, say by 2047, what our government says, you can't do without a robust banking system. And I think regulatory also we have done phenomenally well. Our banking system, after a lot of
Talk
ups and
about,
downs, has become even
right.
more stronger.
Right. So when we talk about banking, are you talking about the entire BFSI sector, or are you just talking about banks? And if within banks also, I want to understand your view on private and PSU. What's the view coming in?
Okay, yes, so I'm talking about actually the entire BFSI space per se, but
Okay.
for banking, Kavita, I think both private and PSU will do well. If you ask our fund house view, maybe we are little more inclined towards private names, but I think PSUs have also been quite strong. I think they have also evolved brilliantly over the last couple of years specifically.
Right, right. All right, Vaibhav, you wear so many hats, I just want to understand now as a fund manager, has it become difficult to generate alpha in this kind of a market?
Not exactly. If you ask me that if we are able to find new names, answer
Hmm.
is yes. If we are able to find very very strong stories, absolutely yes. So alpha generation from finding new names, if a fund house has capability, I don't think there's a problem. But yes,
Hmm.
when markets become volatile and there's a lot of news based momentum, ups and downs, it at times becomes difficult.
Hmm.
But as a fund house, our fiduciary responsibility is to manage investors' money. So rather than focusing on news and events, we focus on finding good companies. Our sense is that if we are able to find good companies which are growing in terms of their business, their sales, their earnings, we will do well. See, like Ray Dalio has also spoken in his book, markets are like pendulum. They keep moving uh, either right or left depending on news, exuberance or negative news. But ultimately, market responds to the center point, which is earnings. And that is what we also firmly believe in. If we are able to find good managed companies where the earnings continue to do well, I think we will do well. But finding alpha, Kavita, is actually a very, very interesting piece because India is a very, very heterogeneous country. You have so many sectors, you have so many new names coming, and I think that's where uh, we are quite excited about.
Hmm.
I've also said that many times that India story is also about per capita income growth, and per capita income growth means a lot of new sectors will evolve. We wear different shoes on a Friday and different shoes on a Saturday, and maybe party shoes are different. So all those things reflect that new consumption trends. I'm just giving you one example. There are so
Hmm.
many others,
Hmm.
but all these are evolving sectors, and that's where if a fund manager or a team of fund managers they can find the next big stories, I think alpha should not be a problem.
Right. Let's talk about quarter earnings across market caps. What's your view, especially talking about mid and small cap?
So they are in line. So we expected about overall on the market we expected about 8-10%, and I think we are on track. But what we are more convinced about is that 2027, 28, 29, those numbers are looking even better. Our uh, the analysis which we have done, I think small cap companies earnings growth are looking like 20-21% over next 3 to 4 years, and if they play out accordingly, I think these are the very, very good times to even start looking at mid caps and specifically the small caps.
What actually themes interest you in small caps? This is a very risky area for investors in terms of expectations. You really need to have a lot of patience and need to stay put for, a long time, more than a year, especially. So where is the pain right now in small cap, and where can we see good valuations coming in?
Pain per se, Kavita, my sense is that if the earnings doesn't play out the way they are looking like, that's a bigger pain. But otherwise, if I have to pinpoint a particular sector within small cap where we think that there is some risk, it's very difficult for me to tell. But I think if you say that where are we overweight, underweight, maybe we are neutral to underweight on staples, we are neutral to underweight on IT, but other than that, I think pharma, banking, chemicals, consumer discretionary, all these new age companies, all these look pretty good for us, good to us.
All right, one last question and then we'll wrap up this discussion. So, hypothetically, one sector I want to know from you where you would be overweight even if the market's corrected 20%.
Uh, See, I've always been a firm believer of portfolio allocation rather than a particular sector or a stock or a segment of the market. I think how your portfolios are ready for any volatility is what matters more than a particular sector. But if I have to answer you, I think I'll put our neck out for BFSI space overall. We are quite bullish on that.
All right, so BFSI, that's the sector for you where you're putting the buck. And with that, thank you so much, Vaibhav, for joining us today and
Thank you, Kavita.
talking to us. And with that, it's time for a short break on the Money Show as well, but then you stay tuned.